it
All
hits.
right, we're getting fancy with the intros now. Hey everybody, welcome to the Trader's Edge, episode 5. My name is Chris, known online by many as Don Corleone77. And I'm here with the legend whose intro you saw at the beginning, Kenny Glick, who those of you that know him know the genius Kenny is, and often referred to as the grandfather of day trading. So,
Yes.
yeah, so
Grandfather makes me sound so old. Granddaddy.
you are a little old, bro.
Yes. Hey.
You look young. You look like a early 30s, but
Right.
you're an older guy. You take that hat off like me, we can't fake it, bro.
I guess I got a college graduate son, so I guess I'm getting there.
All right. Well, hey, we got an action-packed show tonight, and we're gonna jump into it pretty quickly here. So this is going to be an interesting show because as we've talked about in previous episodes, what I do, the show's called The Trader's Edge, and basically what we're trying to do, Kenny and I, we're trying to teach you concepts that are used by professionals. One of them being having an edge when you go into trades, also having a system. These are things we consistently talk about. And the reason we do is because, and we've mentioned it multiple times, and I just want to show you a chart here. We've mentioned that people who try to trade for a living after, I think it's 5 years. Ken, if you pull up the chart,
You got it.
93% of people who try to trade, so after 5 years, only 7% of those people are still trying to do this as a living, as a vocation. So it shows you that this is not an easy task, okay? Sometimes it feels easy, like times like now when the market's going up, seemingly nonstop. Everybody feels like a genius, right? But it's not easy. And so what we're doing here is teaching you concepts to keep you in the game, to keep you so that you're consistently making profits. That's what we're doing. If you're just a guy who has a job or a woman who has a job and you're just putting money into the markets, auto deduct into the markets, that's a strategy and that works. But what we're talking about, Kenny and I, we do this all day, every day. This is what we do for a livelihood. So in that instance, if you're going to be doing that, there are techniques, concepts that you can learn to help you to become more successful. Okay, so I just wanted to put up that chart. We've mentioned a couple of times that stat. I didn't want you to think we made it up out of thin air, but those are the numbers. You have them there. Okay, so that said, Kenny and I do approach things a little bit differently. As we've said before, there is no one size fits all for everybody. So based on what your risk tolerance is, what you feel comfortable doing, basically, how you look at the market in general, it's going to determine the way you approach your trading. And so what I do, I tell people, not everybody will do what I do. Not everybody's going to do what Kenny does. Although I got to be honest, I'm not a day trader in general. I never consider myself a day trader. But after learning a lot from Kenny, I have allocated a portion of my portfolio now to doing day trading. And I actually sit in on Kenny's room, and I've learned a ton by doing so. So, again, we're going to introduce you to different ways to approach the market. And we're going to, and in this episode, we're going to diverge a little bit because what I do and what Kenny does being different, we might look at some things differently and approach things differently. And we might have that in this episode. We might talk a little bit about that. Okay. So with that said, by the way, I want to mention in our previous episode, we talked about the importance of looking at various sectors. We brought up a trade in the last episode. If you were with us, we talked about the uranium trade. And from the last episode to this one, if you got in on that trade, you did pretty well over the last couple of weeks. I think that's fair to say, right, Kenny?
Yeah, depending on, most of them did move up.
Yeah.
Yeah, I think I don't know if I was able to speak of Lyft and Mob. I think those are the two ideas I gave.
Yeah, that's right. You did. And
So,
Bob's been doing pretty nicely as well, right?
yeah, nice move to $10. Yeah, generally, I mean that's just market mechanics right there. 250 stock gets over five, they generally get 750 and $10. So, I'm pretty much done with that trade. But again, I'm not a big swing trader. And speaking of swing trading, it's funny that I'm mostly a day trader, but a good swing trade is usually coming out of a day trade. The typical swing trader or investor was a day trader at one point, and then his swing trade became really awful, and now he's an investor. And we had that conversation. I was on Yahoo Finance. So if you guys, I'm on a show called Stocks in Translation. If you guys Google it, you'll find me. And it was kind of comical because the hosts were kind of like, "Wait, what are you talking about swing trading for?" And I was like, because this is the market. I bend to the will of the market, and that's what we're going to be talking about. A lot. What we're going to get into, but I bend to the will of the market. You show me what's happening, I'll join it. That's going to be the theme today. So, as far as swing trades are concerned, for me, they've never been great because I need instant gratification. I don't want to wait, and also then I feel it puts me more at risk when I hold an overnight or a swing trade. But yeah, let's go. Continue.
Yeah. So again, difference being Kenny as a day trader, he's making trades and he's not as a common practice, fair to say, Kenny, right? You're not typically holding overnight, right?
Right.
You're in and out of trades. You're using, and Kenny will be talking more. So please stay tuned here. He's going to talk more about what he does and how he uses a specific metric that's really successful for him. What I do as a swing trader, I do hold positions for longer periods of time. Okay. So there are certain metrics that I look at that are important to me, whereas Kenny, they might not have as much import to what Kenny does as to what I do. Okay. So with that said, I want to bring up kind of where I am, and I'm looking at the market right now. Today being, what is today? The 27th of September, I think it is.
28th now.
Or 28th of September. Okay. So since I mentioned on the previous podcast, on April 9th, when Trump paused the tariffs, I saw, for me as a swing trader, I saw an opportunity where I thought the market was oversold. I went extremely aggressive. And just to give you some numbers, since April 9th, my trading portfolio since the 9th has been up 219% since April 9th. Done pretty well, right? The markets have done well in general. I don't know the exact numbers. NASDAQ, I think, is up over probably 40% since then. But, yeah. So, but I've pretty much outperformed the market. But that's what you would expect, right? I'm doing this for a living. If I'm not outperforming the market doing this for a living, I better go find another profession and then just, I could just invest in the index funds, right? So I got to outperform the market, and that's why we're here. And if you're a trader, you're going to want to outperform the market. So I got very, very aggressive at that point. And with the techniques I use, the edge that I use, the methodologies I use, the system, I've been able to outperform the market by 5x since April 9th. But what I'm seeing now, and this is as a swing trader, there are a couple metrics that have been flashing, macroeconomic signals that have been flashing, that for me, what it's telling me as a swing trader, since I hold longer term, I'm kind of taking my foot off of the pedal a bit, okay? And that's my message overall. I'm going to talk about the three things that I'm seeing that are flashing to me. And then Kenny's going to talk about what it means. It's not as significant for Kenny because he's day trading. He's not holding overnight. He's not looking at that longer term. And as he said, he's more of a show me and then I'll respond to it type of situation. But the three signals I just want to mention, and two of them are going to be in the description for this podcast. There is a separate podcast done by a guy that I follow on the macro level. His name is Brant Hackney. He goes by the name Wolf on Wall Street. I think on X his handle is Wolf on Wall Street Trade. And there were two signals that he's called out recently that caught my attention. Okay. And one of them is a signal, it's called an ABI signal. It's an absolute breadth indicator. And when that signal shows up, now again, all we're talking about all the time is probabilities, right? We're looking at what, nothing is 100% certain is ever going to happen. The market can do whatever it wants to do. But if we look at historical trends, we look at historical patterns, sometimes there are things that tell us there are higher probabilities of things happening, right? And with an ABI indicator, what that normally tells us, and you only need one instance where it shows up, it normally tells us with a 90% hit rate, meaning 90% of the time this happens, we typically see volatility in the market increase about an average of 50%. And that increase can happen anytime between 1 to 30 days, okay? And again, on an average, volatility increases by about 50%.
And
That's what that metric
when was
tells
this
us.
unicorn first spotted?
What's that?
When was this unicorn first spotted? Recently?
We actually have had the indicator trigger 11 sessions ago.
Ooh.
And we've had 11 straight sessions where that indicator has flashed.
Oh.
Okay. So for the last 11 days, that indicator has been flashing.
So even though we've had some selling, this is telling us that there's more to come?
It's telling us, what it tells us is volatility. It's a volatility indicator. It tells us we're likely going to see increase in volatility. And we know, and that's a metric you've talked about in previous episodes, when volatility increases, it's typically not good for the market, typically, right? So that's what that indicator is telling us. When have we seen it before? We saw it at the beginning of this year, before the market went into a foxhole, right?
Right.
We saw it, and that indicator triggered on February 13th. So again, I'm only going to give you top line. If you want more information, watch the video, because Brant gets into this really in depth, and he explains it all. It's pretty fascinating. But the last time we saw it was on February 13th. The market pulled back about 20% from that time that indicator showed. It also flashed in July and August of 2024, right before the quote unquote tech wreck, where the market dropped. And in particular, the techs got hit pretty hard. We saw the signal again in the beginning of 2022, and the market dropped from January through October of 2022. And we saw it before COVID, okay? So again, it doesn't mean it's absolutely going to see volatility increase, but it's got a 90% hit rate. So
strangely enough, 3 out of those 4 moments of time, it almost predicted a black swan event, because those 3 times you had pre-COVID, and again, I had some people telling me that there was some weird stuff going on at the time, right before COVID, and people were buying puts right before the Tom Hanks got COVID, everybody freaked out. But 2 of those other times, that was right before yen carry unwinding, and just before, again, I don't know how this stuff factors in the president and the tariff tantrum and the cardboard day, because the market was selling off right around that time already. So the indicator, I don't know if it was that foreboding about an event like that was going to happen. Nobody knew that was about to happen.
We don't know, but what it's telling us is something was triggering in the market, like you said. Like with COVID, the congressional people were briefed on COVID.
Right.
And so were the staffers.
Right.
They knew before the general public knew, right? So, I mean, it doesn't tell us absolutely, but so that's one indicator that's flashing right now. And the second one that Brant talks about in the podcast, if you click on it, is another one. It's a completely separate indicator, another volatility indicator that's also flashing. And what that is where we have the S&P and the VIX having a positive correlation, okay? I'm not going to get into the details in this podcast. That's not our purpose. Again, if you want more information, you can go to the Brant podcast. That's in the description. But what that tells us, again, when that flashes, it's another one that tells us often it's a precursor to increased volatility in the market. So we have 2 separate indicators that are both flashing, telling us often, again, not 100% of the time, but it's telling us there's a possibility of increased volatility in the market. When did we see the positive correlation previously between the S&P and the VIX? And normally they're negatively correlated, by the way, and very far negatively correlated. Now we're having a positive correlation. Last time we saw it was before the tech wreck in 2024. We saw it before January 2020. We saw it before COVID. And we saw it in 2019 before the quote unquote Volmageddon event, right? Which volatility, and the market pulled back, but the volatility was shot up dramatically. Kenny, I remember, you probably remember.
Oh, I remember. Side note, I just realized the last time I heard the name Brant, right? It's Brant, right?
Yeah, Brant Hackney. Yeah.
So don't judge me, but 1991, our nitrous oxide dealer at the raves, his name was Brant. Probably not the same guy.
I don't think it's the same one. I don't think so.
This market's going to tank any day now. I haven't heard that name in like 30 years. Unbelievable. Right?
But the point being,
I'm having flashbacks right now. Sorry.
That's not the flashback I was asking about. I was asking about Volmageddon, not that flashback.
Oh, the point being, nowadays, yeah.
So we have two separate indicators, both related to potential increases in volatility, that are both flashing at the same time. And again, what Brant says in that podcast, when you watch it, these are not scalpels. They don't. It doesn't say this is exactly, it's going to cut, it's going to drop dramatically. Brant refers to them as invisible storm clouds. And what he's saying is there's some clouds, here that they're not overtly visible, but there's some storm clouds, and there might be a little bit of storm brewing. So those two things are going on. And then a third thing that was pointed out to me through a separate friend, and Kenny, you could pull the chart up on this one, is an increase in volume of credit default swaps. Okay, I'm not going to get into credit default swaps, what they are. You could watch The Big Short if you want to learn more about this. Okay, but if you notice on the bottom of this chart, you see that we saw an increase in credit default swaps. It's kind of like a protection. It's like a hedge against downturns in the market. And what we saw it at the beginning of the year before the market dropped, right? Then look at the volume. It basically went to sleep, right? Again, the beginning of the year, the market went into a foxhole, tried to protect itself from flying objects at the time, right? And then it went to sleep. It snoozed, right? It went into hibernation. Now we're seeing the credit default swaps pick up again, okay? Why would that be? Maybe, don't know, right? But this is a hedge, right? And what it's telling us is that, there's a risk looking forward. Traders are hedging themselves against downside risk in the market, right? So we have this going on as well, right? So again, do any one of these mean something's definitely going to happen? No. We have three kind of separate indicators, all kind of, and this is what's piqued my interest personally. And since I'm up, the market's made such an amazing run since April, and I've done extremely well, I've kind of pulled back on the pedal. That's my point of this message, right? So in the past week, I was fully invested. As long as the market was roaring, I was fully invested. I came off of margin, but I was still 100% invested. I've moved now to a higher percentage of cash than I was previously, right? Just to protect myself, right? That's the way, me as a swing trader, this is how I play it. All I'm doing is playing probabilities. I don't know 100% certain what's going to happen. I don't know for sure volatility is going to pick up, but these things are all kind of hitting me in the face going, you may want to reevaluate being fully invested, because I've been through downturns before, and it's not fun as a trader, right? As a hold investor, a buy and hold investor, you kind of welcome downturns. The market has to have downturns, otherwise there's no chance to buy, right? It's keep going up and up and up. When would you get a chance to buy in and make really good money? So the point being, we're told by the professional money managers, quote unquote, that you can't time the market. You can never time the market. But as a trader, someone who trades every day, that's where I think a lot of the money can be made. If you can time the market, know when to get aggressive, know when to protect yourself, you leverage those things to outperform the market.
So
Otherwise, I'm not just
yeah.
I'll just buy the index.
Here's my question. How long do you go to as you're waiting for the storm clouds to now become a storm and start pouring? Like, how long do you wait? And
So,
then you say, all right, well, I guess that indicator is not telling us what was about to happen. There's got to be
so,
a time period for that.
so again, it can be longer, but typically that ABI indicator, for example, usually we see increased volatility within 1 to 30 days, right?
Okay.
Can go longer, right? But if it's 90 days out, you might want, again, it doesn't always predict increased volatility, but I'm looking at, this indicator just not only triggered once, for 11 straight days now, it's triggered, right? So
Right.
I'm going to be looking over the next month or so to see if there's something that comes out in the market. I'm also looking at increased credit default swaps, right? I'm seeing that positive correlation in the VIX and the S&P. So I'm kind of like over the next month, I'm being very, very vigilant, put it that way, right? And am I completely out of the market? No, I'm still trading, but I'm looking and I'm being prepared. And that's where I think somebody like Kenny, who's experienced in this area, if you did see increased volatility, then there's different ways to trade that, right? And what would you do if there was an increase in volatility? Are you going to hold all your long positions and just sit through it? Maybe. I'm not going to, but that's a decision you have to make as a trader,
Yeah.
right?
I mean,
So
it's a big difference for us. Again, for as far as volatility showing up, bring it.
yeah, I
Bring
know
it.
you like volatility as a day trader,
Yeah, and
right?
I look at very specific things too, and this it's a great conversation to be having right now because we're almost through the seasonality of volatility where it's supposed to pick up, and then we got a little burst of it, on last Tuesday, the Rosh Hashanah to Yom Kippur trade. That's what we're in the middle of right now, where notoriously this is where we do have some volatility, and it came and already went. I mean that it was like a
It was like a little blip, though, right? It wasn't
very,
really significant.
very
Yeah,
small flip. And then, Friday's rally into the close kind of it was right back to status quo where, oh, nobody cares about anything. Rally into the close, gap up on Monday. Nobody cares about anything. We never go down.
yeah. I
So
could.
and you also had the volatility products not just pull back on Friday. They crashed. They had one moment. They had one moment where like, oh wow, the VIX is picking up right here. UVXY is picking up. UVIX picking up, and then it was just absolutely just a false flag or a false alarm, and they cratered into the close, like percentage wise, a lot. And again, you could if you trade UVXY, you could have been buying $11 puts for 8 cents. They wound up going to 75 cents for a 10 bagger, and you don't even think these are trades that you should be putting on a Friday during September, shorting volatility. But there you were on Friday, shorting volatility, and I was caught off guard by it. I'm like I said, I welcome the volatility. I like when the market gets scary on a Friday because it usually has a no bid close, as we call it, where nobody wants to own things, and it gets really freaky and crazy. And if you trade options going into the close, it's awesome. And none of that happened. And
But here's
it's
the
just
thing, right? I'm not I trade, most of my attention is focused on sector rotation, individual stocks. So I kind of rely on other people to help me look at the macro picture.
Mhm.
Brant's one of those guys.
Yeah.
And he actually, if you follow him, anyone interested in following him, he actually saw what he thought was a 1 day oversold condition. So he actually anticipated a bit of a bump on Friday, interestingly, and he thinks this is part of a bear consolidation that's happening now. It fits into the pattern.
Say that again.
Uh,
What's it? Bear consolidation?
a bearish consolidation.
What is that? It's no
So,
such thing. It's bullish
so
consolidation, and we always go higher. After.
we saw a pullback. He says he believes it's consolidating here, and he thinks in his mind this pattern has been We've seen it before,
Yeah.
and it looks like it could lead to another leg down.
Oh,
Now, again, does he say 100%? No. But what he's trying to do, and what I try to do, is just play the probabilities, right? So if we just walk into this and we have recency bias and we go, the market's just going to keep flying, for you, it's okay because you can adjust quickly, right? But if somebody just thinks the market's never going to go down and they're long, swing trader, and they just believe it's never going to have volatility, then they could get really caught off guard. You can
sure.
get hurt pretty bad,
Right.
right? So it's somebody, like, if somebody's under your tutelage, then I think that's fine and they're protected and you can call that out to them. But if somebody just, kind of, has a not as a intimate view of the market, you can get really stung. You get, in a short period of time, your face could get melted off. If that happens. So that's all we're saying is don't get caught off guard, and consider what you would do if any event were to happen, because there's some signals telling you, you know what? Historically, there's some probability here that we don't normally see. These aren't rare, but they're not common indicators that are popping up. That's the point.
Let's keep
Okay?
this conversation about you then. So, what do you do? I know I spoke to my father, who's long only been invested in. He never buys puts, and the only way he does hedge is he sells at the money calls a couple of weeks out or a couple of months out to kind of cushion the blow if he does think there's going to be some volatility. He finally sold calls against his Oracle after owning the stock for 32 years. So
And your father won't sell, right? He doesn't need to.
he'll only sell, if he just doesn't like the company anymore, and if he's doing well with it, he sees no reason to sell. He's like almost a collector of stocks.
Yeah. And that's the position in life he's in right now.
And also,
Yeah.
he never buys puts, because if you're going to buy a put, and this is one of the smartest things he's ever said, if I'm going to buy a put, I might as well sell the stock.
Yeah.
Because if you're buying a put, then you kind of want the stock to go down immediately. And if you think it's going to go down immediately, why are you in it?
Why are you in it?
Right.
That's
So
exactly right.
that's why he only sells calls. And
Same idea when people are looking at buying stocks. Like, a lot of times the best stock to buy is the one you already own, because you own it for a reason, right?
Right.
So for me, I have to, again.
Well, my question is, what do you do?
Yeah. So I do this for a living, right? And I have to consistently make money. So what I've done is I've moved out of my full position, and I'm about 75% in cash right now,
Right.
and I'm watching, right? I'm not short the market right now, okay? And there are some, if you believe these things are, if you believe in the probabilities and you're highly convicted, you may want to consider shorting. And there are instruments to short the market with. The Qs, you can short the Qs, you could do different things. But I'm not short, to be clear.
Yeah.
But what I'm doing is I'm watching, and this is not an easy play when you're going, and Kenny, I sit in his room, and he says all the time, right? Shorting is short-lived, and you're going to die if you stay short. So this is, if you're going to go short, it's never easy to do that.
Right.
And you got to be really, really, really careful in any play that you make, and you want to kind of move into it in a gradual position. You don't want to go heavy short right away or anything like that.
Right.
But I'm going to be watching the volatility index. I'm going to be looking for events. I'm going to be looking for potential triggers, right? Something's telling us, are people in the know? Do they know something that the average population doesn't know? Like we saw with COVID, or we saw with other events? I don't know, but something's telling me some people are being pretty cautious that understand market dynamics. They're being a little more cautious. So that's what I'm looking for. Is there, I watch the news every day. I sit in front of the computer. I'm looking for something that might trigger a volatility event. And if it does, then I want to have a plan, whether it's, VIX related instruments where you could capitalize, like Volmageddon, right? When that thing happened, there were hedge funds that were short the VIX that went out of business from Volmageddon, right? You remember. So are you short the VIX right now? You may want to look at that strategy in light of all this other data that we're talking about. So for me, I've moved more to cash again, but I've had a really great year. It's been a great year. The last 5 months have been pretty incredible. So, for me, I don't want to risk losing that. And I feel like the upside is there's still maybe some upside, but I'm okay with that, right? But that's because that's where I am. I'm older. I don't have to, take massive risks at this point. And so that's what I do for me. And that works for me. Um, Everybody has different, like I said, different risk tolerances. You could say, I don't care what those metrics say. I'm going to stay fully leveraged. I'm going to maximum margin. The market's never going down. Do whatever you want to do. But this is the beauty of what we do, right? So that's kind of how I'm playing it.
Yeah, I just had this conversation, kind of like what do you do? I was talking about the Yahoo guys about what do you do if some of these stocks get hammered. And I actually beat them to the question. We're talking. They were saying, is it safe to get into these stocks? And I was like, well, it's kind of irresponsible to buy a $2 stock that's trading at 40 right now without waiting for a pullback. But that's what I said at 20. That's what I said at 30. Now the stock's at 40. So the idea, when it does pull back, sure, it could pull back 20% or 30%. Then what? It's going to be bought. Yeah. So everyone who's waiting for that dip, they're waiting for this market to dip so they can buy it. The extent of sell-offs now is becoming less and less and less, like you witnessed.
Shorter durations too.
Yeah, tariff tantrum. The idea of a long bear market, I don't even know. I can't even fathom it anymore. And again, I'm supposed to be the bear here. The way I'm bearish is I don't have a portfolio. That's really what it comes down to. I'm so skeptical about the market, and I'm the guy. I'm worried. I worry about everything. Conflicts overseas. I think nothing translates into sell-offs anymore. That's why I'm really looking forward to see if this thing plays out, because, like I said, everything I was taught for 30 years, a lot of it showed up and nobody cared. Yeah. Even like simple as when Tesla sold off on those earnings and didn't recover, that would be normally bearish. But look what that stock's done since. It's rallied almost 40% now. It's unbelievable.
And to be clear, I'm not suggesting this is a crash, that we're going to crash and the market's going to be through a 5-year bear market.
Right. Just all I'm doing, volatility that's going to come.
I'm trying to time the market.
Right.
And if there's a volatility event, I want to use that event to both A, protect myself, and B, look for an opportunity where maybe I can take a position that if I'm just long everything and I have a long bias, a high volatility event's going to work against me, right? So I'm protecting myself, securing my gains, and then looking for opportunities if something starts to manifest, right? And that's the way I'm playing it.
Do you,
right?
Do you buy VIX products? Do you buy VIX products?
I don't traditionally, and they're hard. Like I have friends that do, and it's not an easy play.
And they're terrible. They disintegrate so quickly.
They do, and it's hard. So you gotta time it really, really well.
And
but I don't. I'm in a position. I just bought a home, as you know, Kenny. I'm not putting a lot of my stuff at risk right now.
Right.
Like if I see these things and I ignore them, I just have been through this so many times where I have conversations with my friends and they're like, damn, I wish I had taken profit when when the market was up. And then we're sitting there having this conversation like, dang, that was 20% ago and tech's down 30%. But that's what's happening. Normally, I think Brandt says this, that the change in character typically precedes a change in trend, right? And what's been leading the market has been like the Mag 7 stocks. And they're even kind of not advancing the way that they were previously, right? And this is one of the this is what feeds into the breadth indicators, right? So, if they stall out, like what's pushing the market right now? What's been pushing the market? Really AI, there's a few factors that have been pushing the market. And if those get exhausted, what is going to push the market higher? And what event could trigger something? I don't know.
Yeah.
But I'm just playing the odds. That's all I do. I play the odds, just like any poker player tries to play the odds, and the odds don't always work, But 90, when I see 90%,
that's something. Yeah.
You have a 90. Your faux show bro. You after earnings hits about 90% of the time, right?
Right.
I listen to that. So
Yeah.
I want to follow what you do with the Faux Show Bro after earnings, and I've learned a little. Right? You saw a couple
It
trades
works.
I made.
Yeah. Yeah. Yeah.
That was from you. I learned that from you.
I
Right?
learned from watching you, Dad.
That's
Oh,
right. I learned from watching The Grandfather, right? The Godfather watched The Grandfather, and that's what happens.
yeah.
So in this case, when I see 90% hit rate, it perks my ears up, right? And I'm like, oh, I might want to look at this a little bit, right?
So someone that's someone that's sold some of their portfolio, what do you look for to get back in? You'll get right back into those same stocks, probably, like you said. The ones you want
Yeah,
to buy are the ones you already own. So now
yeah.
you took some profit. Now they come back. What's that magic number for you? You like the 20% haircut, or is there a
It,
price
it, it,
or a
it,
chart that
for
makes you
me,
go back
yeah,
in?
for me, since I'm watching the news all the time and I'm watching kind of the trends in the market, like even this last, these last numbers, these last economic numbers, a lot of times if the market is really ready to rip higher, a positive number. By the way, I got to be honest, the credibility of these numbers, I'm a little bit skeptical, right?
We don't know
Uh,
about anything anymore.
yeah,
I've always been skeptical. That's why
yeah.
economic data, really.
But like the inflation numbers, right? Because everybody's worried about inflation,
Right.
and if inflation does, peek its head up, then the market's going to pull back a bit because we built in a number of the Fed's funds rate. We could look at it, and we built in the funds futures. We built in a number of rate cuts,
Well,
and if that has to get pulled, if that gets pulled back, the market adjusts, right?
I mean,
That's how it works.
the easiest answer, what I've been doing, as far as economic data, it really comes down to if the market reacts to economic data in a negative way, then the market something's different. Something's different because most of the when the market's ripping, hey, the beige book came out. Oh, did it?
Yeah,
Oh,
yeah. You don't even know, right?
oh, really? Like Rick sent. Oh, I forgot which Rick sent. The guy who's always yelling about economic data like it means something every morning.
That's Santelli, I think it
Yeah,
is.
yeah,
Yeah,
yeah, yeah. And he's so passionate about it. And I'm like, none of what this guy's saying matters. The market's going to go up today. Have a nice day. And it just
Uh,
goes. But when it reacts negatively to economic data
then
and then you see volatility products going down, that's the double, the daily double that I'm looking for. I want to see negative reactions where there's usually something positive going on. I want to see volatility going up into the close on a Friday. That's a warning sign. But what did we see on this Friday? We saw absolute destruction of volatility. So then I walk in. I remember I used to be afraid checking the futures on Sundays at 6 o'clock. Now it's just like, oh, up. it's kind of getting boring at this point. But the seasonality. According to the statistics, if you make it through the seasonal moment where there's supposed to be volatility, usually the volatility doesn't show up. So this is amazing because we're fighting two really, really important things. What you're saying, all the statistics that have shown 90%, and then you got Jeff and Hirsch and the Stock Traders Almanac. We were talking about this last week about if we make it through September, usually that volatility doesn't show up. So this is exciting. This
yeah,
is what I love. That's what keeps me going for 30 years. So I'm just as curious as anybody else.
yeah, yeah.
I don't have to, manage a portfolio or worry about my swing trade. So I'm just excited about
Yeah, yeah. That's the beauty, right? And what you do, you don't have to worry about that,
it.
right?
Right.
Like if it comes up, you adjust, right? And it's that simple. If someone is a swing trader or someone is holding for periods of time, then these things could be really meaningful. The one thing I will say is, my experience is most of the time when I've seen a triggering event, it wasn't something you ever thought you even knew about,
Right.
right? It was something under the surface that nobody was thinking about, that reared its head that nobody even considered, whether it's the unwinding of the yen carry
Yeah.
trade or
And
whatever it
Jerry
is, right?
was my black swan. That
Yeah,
yeah.
they're called black swans for a reason, right? They're
Yeah.
not. You don't expect it to happen,
Right.
and then when it happens, oh, I really that was going on. I didn't know that, right?
Right.
So that's all I think. I think what this is telling me is, people in the know are positioning. People smarter than I are positioning a certain way. I just want to listen. I don't. Like I said, I'm not convicted that 100% probability going to happen. But I think in the near term, we see some volatility. I don't think it's the start of the market crashing. We're not going to have a Great Depression kind of thing. As long as the government can spend money it doesn't have, I don't. I'm bullish longer term.
Right.
As long as the government can spend money it doesn't have, and our credit rating isn't affected, and people keep buying our debt into infinity, then the market's going to keep roaring
Right.
over the long term. But in the short term, again, this is what we do as traders that try to make a living. This is where I feel like, hey, here's where I could really outperform the market. Because if it does pull back, most people aren't going to do anything. Most
Right.
people just have their money in their 401k, and then they never look at it. And then the market drops. They watch the news and they go, oh crap. They log into their 401k and it's like, oh shoot, my 401k is down 30%. And they don't, oh wow. But
Right.
we watch this every day. So for
Right.
me, I'm
Yeah.
hoping this happens because this is an opportunity to outperform again.
Sure.
Right?
And that's also, that's why when we're talking and you guys are out there listening, everybody's in a different ball. Everybody's in a different situation. Again, if the market starts crashing, let's say next week, there are people that are be like me, yay, I love volatility, or somebody who's 25 years old, my son, who's been waiting to buy the Qs on a dip. But if you're ready to retire, you're freaking panicking because this is
Right.
your money you're going to live on. So you're thinking about, doing the worst thing is selling when it's going down, which they always tell us not to, but it depends on your situation. You might be forced to sell because this is your money. You need this money. And then if the fear of it, a prolonged sell off, creeps in, you have no choice but to sell.
And
So
you have things that are out there. The one thing I thought was intriguing. This I thought was interesting. A lot of the AI thing is based on this idea of massive capex spending, right? All these companies spending money, and now there's becoming more pervasive. It's not really pervasive yet, but it's kind of starting to get out there, where this kind of idea of all this incestuous investments, right? Like Nvidia invests into OpenAI, they buy the Nvidia chips, right? It's all like what we saw with telecom companies back in the dot-com boom, right?
right,
And
right,
maybe there's not as much investment in this thing as people thought there was, right?
right,
And I saw an interview with Ken Griffin, and he was saying there's kind of like echoes of that going on. He has his own interest in his own agenda, right? But people are starting to talk about that. Like I've seen that in multiple instances where I've seen that information out there, not just one place. It's in multiple places, and if people start questioning that, that could get interesting, right? Like you just don't know,
yeah,
right?
yeah,
So the question is, if you're 25 years old, you got a job and you feel like it's a secure job, you're going to be working for 30 years, and you're putting money away each month, just keep doing that because you're
right,
going to, and if the market pulls back, good for you because you're going to dollar cost average and you're going to get some of these companies at a lower price. But guys like us that have to make money every week and we got wives, they're going to ask us, hey, how did you do this week? My
I'd say
wife, we just bought a house, dude, what are you doing with your portfolio?
yeah. Keeping this conversation going with signs of volatility and signs of things to come. We talked about this probably on every episode is the dash for trash. The dash for trash. If you don't know what that means, is you got your quality stocks. You got your S&P 500. Let's just say those top 500. Obviously not all of them are awesome stocks, but then there's the subterranean of stocks. You've heard of pink sheets, you've heard of penny stocks, and then you just got just stocks that are just they're not even probably not even real companies, and they're just ripping every day. These companies are hemorrhaging cash, even declaring bankruptcy, and the stocks are going up 200-300% because of these price action. And people just see the shiny object and they jump in. There is more of that than I've ever seen, and that used to be bearish. And now I'm having to start to think, nope, that's just a sign of risk being on. And it's just part of this market, I'm not going to say the new bull market because you should never say this time is different because it's never different. There will be a sell-off. And I'm telling you, there will be a recession and there will be another stock market crash probably in the next 3 to 5 years. It's almost guaranteed. But now a lot of what I've used to believe in, and it worked. The dash for trash, the volatility, stocks selling off on positive numbers, economic data being, ignored or embraced. The dash for trash is still here. I want to show you a chart. This is probably the dumbest chart I'm going to show you guys in a long time. It's just insane, actually. But let me just see if I get this one up for you. Bang. So this is a company, right? The symbol is hilarious. FOFO, right? So if you got FOMO over the FOFO, that's a no-no, but it's been a go-go with the FOMO, with the FOFO. This stock is a Chinese company. If you read the description of the stock, it makes 0 sense. They do nothing, basically. It's probably two guys sitting in an accounting office looking for a job, and they just went public. I think they went public just to see if we would buy it. And, oh, we did. Here it is. This is the trade that Dawn was saying is one of my favorite trades. It's when it gets over the day's VWAP and the prior day VWAP. And this is one of those trades where it never gave us a reason to sell it. Now, if you would have told me it was going to go from $6.58 where we bought it to $50 in 6 days, I would have still held it. But what's the way that we trade is that, again, with a swing trade, as long as it doesn't break a prior day VWAP, and obviously you see how this kept trailing and trailing, this is the kind of nonsense that's going on under the surface that you might not know about. There's 3 of these almost every day. And that used to scare me. But now I'm like, you know what? I guess this is the new way of doing things. This is the Robinhood market. This is the Reddit market. Things have changed, and you have to accept it. And that's why this market, it's so hard for it to go down, because there's so many more people. And we used to be, as retail traders, we're always the victims. We're not the victims as much as we used to be, at least not as much. We're still the victims because we're the last to know. We don't have the research that the institutions have. We don't have this data that we're trying to put out there for you. So we used to be the victims. But now when you've got stocks like this ripping every day, sure, it's a pump and dump, and it probably will be at zero. But as long as you understand your risk and understand your charts, you could stay in a name like this and giggle your way to the bank, because this company legitimately might not exist. I don't believe in any Chinese stocks, but there's no denying it just went from 5 to 50 in 10 trading days.
Exactly. You have empirical data on this, right? But I will say, as an older guy, again, and probably the reason I don't have a lot of friends, because they call me like a wet blanket. But I remember in COVID, we were all like, what was that called? In sheltering in place.
Yes.
So we had to so I would exercise in my house, and I would listen to podcasts. And I remember listening to a podcast where the guy, this was like people sending this stuff virally. I saw it online, and I listened to it, and the guy was saying how, the idea of using price earnings ratios was gone. Like, that was a thing of the past that doesn't exist anymore. And I remember listening on the podcast, and he was talking about different stocks. And one of them I remember distinctly was PLUG, plug was a symbol. This was during COVID.
Right.
And the stock was at near $75 at the time.
Yeah.
And I remember him saying, you got to look at the stock. It's, if you're not looking at the stock, you're not following or whatever. And I think that stock now is $3.
I think it went back to 50 cents for a second.
Yeah.
Garbage. That's been pumped up for 30 years, but yeah.
So, markets can stay irrational for as long as they want to.
Yeah.
Right. Just my experience as someone who's older, right? I'm even older than Kenny, believe it or not. What I've seen is, I've seen irrational markets go for quite a while, but usually over time, I've seen some form of back to fundamentals at some point, and we're not seeing that right now. And that's
right.
What Kenny's point is. Look, if you're not seeing it, then trade what's there, right? So that's what he does, and he does it so well. He does trade what's there. And I've stayed long. I've been uncomfortable staying long, to be honest with you. The last month and a half, I've stayed long the market, and I've made money, and it's been very uncomfortable for me. And you say this, right? You have to convince yourself every day. You go into your room, you're like, is today the day it's going to drop? It was very uncomfortable, but the market was telling me it was moving higher. I wasn't going to try to tell the market what to do. And as uncomfortable as I felt, I played what the market gave me, you know?
Yeah,
But
and speaking of going back to the plays that you had on, just to give let's give another compliment to you. That's the you, my friends. We were talking about this on our first podcast, and I was talking about how it was coming out of this was my Andy Dufresne. So I
Mhm.
didn't even care what this was. I'm glad you told me what it was and why it's going up, but I'm buying it because it's breaking, it's breaking out. It's a blue sky breakout, and stocks that get through 10 generally go, 12.50, 15, 17.50.
and look at DNN. You mentioned, we talked about DNN was another one, right?
Absolutely.
And
Good
you were like,
example.
yeah.
Another one got the fake out, shake out back above here. I didn't get involved until the 235 break.
You didn't want to get in under 250, I think was kind of where you were at. And I
Right.
agree.
Yeah. I nibbled, but then once we got over the double top, 250, and look, 50 cents on a $2, 50 cent rip on a 250 stock, it would take sometimes a year to make that kind of money. And you're busting out and you're making your 20% in 2 days. So,
I mean, it's pretty amazing, right? Like you say, Kenny, there were, 8% in a year. It was a good year, right?
that's where I come from. Yeah.
Right.
Now, if you're not doing 8% of a day, you're a loser.
Well, like, yeah, that's how I feel. Like, some days I like my stocks are up 4% in a day, 3%. I'm like, damn, I'm a loser, right? I don't have the 30%.
I don't want to insult anybody out there, but maybe you won't take offense to this, but if you have a stock in this market that doesn't rally at least one day out of every 3 days, your stock stinks. Seriously, if you have a stock that goes down 3 days in a row, kill it.
Yeah,
You don't. It doesn't deserve your money. Seriously,
in this market, yeah.
there is not many stocks that have 3 down days in a row in this market environment. And obviously, if we're going sideways and it becomes choppy and we're in a bearish environment, yeah, sure. But man, your stock sits around for 3 days or for 3 days in the downside. Ooh, that's like sacrilegious in this market. It's insane. But yeah, some of all those names. You picked a lot of these. The OKLO coming out of 60. This thing went up. It went up 80 points. And finally, even Kramer was saying, "Hey, you got to be looking to sell this thing," and came in dramatically. But some of these stocks, this was a $7 stock a year and a half ago. It went to 150.
This was the inflection trade we talked about previously, right? How for 10 years uranium went through a bear market,
right?
And those Andy Dufresnes that you talk about, that Andy Dufresne's, for those that don't know, we talked about before, was a character in Shawshank Redemption that had us, crawl through the mud and the schmuck and the sewage to get out. And then once he broke out, then he was free. And this trade has been a great trade, and I still think we're still early in this trade. Which, to your point earlier, that's why you were asking me that question. If we do see volatility in the near term, I don't think that the uranium trade's over by a long shot, right?
I agree. Yeah.
If things pull back, and I did this once already, I sold previously. They pulled back, and I went back in, and I took advantage of it.
Right.
If they pull back again, I'm a buyer. Because I think long term that's where they're going. I just don't want to go through the downside. Like, for me, if I do, then I feel like I'm not doing my job. Right. My job is to recognize risk and adjust to risk when risk is evident. And if I don't do that, then I feel like I'm being negligent. That's the point.
You've convinced me that that's where I want to put some money. So for what I'm looking for, again, a big fan of space rockets, robots, quantum AI, and chips, obviously, but I love the idea that none of that's going to happen without something powering it. Big fan of all the names you gave me. So if this market does correct or crash, usually I go back to tech first because I like again I'll swing trade, but you got it. I need a crash.
All of these things are going to require energy.
Yeah,
that's where I've been. I've been good with it. It's been good for me for a lot of stocks, not just uranium.
Yeah,
LITE. You could pull a few of them up. CDRO. CRDO, like a lot of these stocks that are going to be part of that power supply, is like that's been a great trade. And some people say it's a bubble right now. I don't think so. I think we're still early. There's going to be so much need with all this AI and all this, just the amount of power required for an AI query is more than most people recognize, right?
Yeah,
And so
yeah. Put it this way, my friends. Here's another saying that I like: "When in doubt, zoom out." So if you bought this stock, this is the URA. So this is the uranium ETF. If you bought it and you were lucky enough to get in, let's say you just got it on the let's say you just got in on that last drawdown in April. You got a $20, a $20 index that has doubled. The whole index has doubled.
yeah,
And people think, oh man, I'm chasing. It was 134 back here. So that's telling you that, again, just a retrace can get you back to 66 just based on, reversion. So
that's a really great point, because you're right. Like if you have only just a finite visual, right, you're not going to see where the potential is, right?
right.
So that's beautiful. That's a great example there.
And also, again, some of these stocks like the RGTI, I had, again, if you don't know the Andy Dufresne, the idea is that the stock, when it has usually one decent move, and that's why I was kind of hip to these quantum stocks from a couple of years ago, because it was a fad once before. Now it's becoming a little bit more than a fad, but they were all going sideways and they came out. This is a longer extended, this is a lifetime of a lifetime VWAP, and it exploded. So, when this stock started to take off, and people said, "Oh my God, how could you still like that stock? It was $3. $3. It went sideways for basically a year and just broke out." Get involved. If you weren't buying the dip, or at least getting involved while it was going sideways, this is a year-long consolidation breakout. This is not, a lot of people think, oh man, everything's been going parabolic for so long. Absolutely not. Especially like, stocks like Tesla. This thing got hammered. It got absolutely hammered, and they were throwing it out, on earnings day. The stock was 216. It's up 100%. This is Tesla, people.
Yes.
Tesla. So, again, give me some selling, please, because there are so many stocks I want to own. I want to own Tesla again. I was an early adopter. I was in this thing at $30. I remember me and my father were high-fiving when this thing got to 60. We were laughing our asses off. We're like, I can't believe this thing's up 100%. Meanwhile, we didn't know what we were into. And I think it's so much more than a car company. Anyway, I don't want to start talking about individual stocks, but I think it's going to be more of a robotics space exploration company in the next 15, 20 years. So it's a hard stock to value. That's why I still think this thing is, I don't like to agree with Kathy Wood about anything, but I think she's right. I think this thing could go to 3,000. I think that's where our target is. I love it. And again, with this stock kind of represents tech. And, that's why it's so hard to be bearish this market right now. But, all we've been saying this whole podcast is this: give us the moment. We're trying to time the moment. You're trying to time the moment. I'm waiting for it. I hope you're right, and I hope you're right for everybody's sake. And again, to prepare for it, again, that's up to you. What you want to do: buy puts, sell calls, or sell your stocks. That's up to you.
So just to recap it, so I highly recommend, if you're not following Kenny, follow Kenny. If you're day trading, these things are actually, they're not inconsequential, but he's able to trade every day, right? And he's trading off of that. For those that don't know, the VWAP, volume weighted average price, that's a key metric that's used today. If you're interested in that type of trading, really you gotta follow Kenny. You have to.
Yeah, and again, what's good about it is, like I say, if you conquer the day, you can conquer the week, the year, forever. Because the charts are always the same. It's just a different time frame, just like everything we're talking about. Depending on who you are, if you're a swing trader, an investor, or a day trader, everything's different. How old you are is different. When you need this money is different. But man, when you're a day trader, the reason I love it is that if you can live in the nucleus, then you could come outside the nucleus. If you could live in there and really just get used to price action, that price action it's the same, just on bigger time frames. And that's why, like when in doubt, zoom out. I want to show you another chart about some ridiculous moves here. If you guys know about it, again, this is why this market is just insane. This is a company that I don't even know if they exist either. They're the Amazon of Africa. They sell rugs. I don't know. It's a German conglomerate. I've heard a million stories about this stock. It was a hot IPO. It crashed. We got involved, and then it was in the meme. It became a meme stock for a while. It went from $1 to 70, crashed back to $1. We bought it down here at $2, ran to 15. And basically the company, it's garbage. But in this market, when a stock like this breaks over 250, you're thinking, oh my God, it's up 140% for the year. And then it tacks on another 600%. That's the market we're in right now. And if you could just, when you appreciate these chart patterns, and then when you zoom out, that's why those uranium stocks, yeah, you've missed a bunch, but there's a lot more to go. That's why I'm super bullish all the stocks you gave us last week or the week before.
Yeah, I think longer term, I'm still believe that the line of least resistance will be higher in the long term. Again, so that's the point. Follow Kenny if you're interested in day trading and learning these concepts. If you're a swing trader like me, by the way, I think I mentioned I get in Kenny's room. I've learned, I've allocated a portion of my portfolio to day trading for that reason. I feel comfortable because I believe in the techniques that he teaches. But if you're a swing trader, what I've shared with you today, I've shared with you some metrics. And to be clear, most of the time these metrics appear is when there's extreme exuberance in the market and the markets are at all-time highs. That's normally when they appear.
Right.
And it's just telling us that there's a possibility, a high, I don't want to just say possibility, a decently high probability that we're gonna potentially see some volatility introduced into the market. And if that's the case, have a plan. If that's gonna happen, and if you wanna just sit through it, I'm not going to, but if you wanna sit through it and say, it's eventually gonna go higher, if it takes 3 months, if it takes 6 months, if it takes, like in 2001 with the dot-com boom, if it takes 10 years, I know it's gonna go higher and you're good with that, then don't do anything, okay?
Right.
But that's not what I'm gonna do. That's why I'm doing what I'm doing.
Right. And if you want to know what we're doing, and again, Don's on our show. We do something called the Schmooze on Thursday nights. Basically, the best thing to do is if you want to just get, minute-to-minute commentary, that's what I do. I'm basically live for 4 hours every day. So from 8:30 to around 12 o'clock, I'm nonstop. So I'm looking for ideas of navigating the market. And then we have guests come on, and we're basically an 8-hour podcast almost every day, or at least 6.5 hours. And if you want information, just email me directly, kennyglick@aol.com. Yes, you can laugh about it. AOL.
And I'll be launching a website likely within the next month or so.
Right.
My own website. So I'll be sharing this type of information. Again, if you're a swing trader and you want to follow news, you want to follow analyst report information, that's the kind of stuff I do. I try to kind of bridge between professionals and retail. I try to share information to retail traders that they don't normally get.
Right.
And that's what we're doing. Okay. So with that, we've taken your time here. Thank you for the privilege. It's always a privilege when you give us your time. And please follow Kenny, and we're looking forward to it. And we'll know in the next month or two if I'm just some crackpot. We'll see. But,
I hope you're right. I hope your man, Brand, is right.
I hope Brand is right.
Yes.
All right, folks. Take care now.
Yeah, once again, if you guys, my website's hitthebid.com. The podcast, obviously, living on my channel.
Oh, and don't forget to hit the like and subscribe button.
And all that fancy stuff. And you can email me directly. Everybody gets a couple of weeks on my website. You just got to sign up. You sign up for a month. And if you hate me after 2 weeks, we just give you the money back. All right? But
who's going to hate you, Kenny?
Most people stick around. Yeah. That's my face.
Why would anybody hate you, Kenny?
What about your face? I just want to put my fist right in your suckhole. All right, y'all.
Take care.
See you guys. Thanks for stopping by.
All right.